I can see, as usual, we've got people in the UK, the Middle East, and Asia. So evening, afternoon, morning, wherever you are. I can also see we've got someone in Houston, Texas. So I think by my calculations, it must be
they're keen.
God. In the morning there. So hello, whoever you are. To those of you that don't know, my name's Callum Williamson. I do various bits and bobs for APW, including sort of looking after our clients. Today, we've got David Yedley of Prosperity Property, and we were due to have Joe on, but Joe's out looking at new sites today, which I think is quite promising for us, some of which we'll discuss a bit later on. Yeah, so the idea is just to have a quick chat, pick your brains on the state of the UK property market, find out a bit more about what you're working on at the moment, and just sort of let everyone know why we think it's perhaps a pretty good time to be buying in the UK at the moment. To those of you that don't know, David and Joe, pre-COVID, we would fly them out every quarter to run seminars, not webinars, seminars, and meet with clients, all that sort of stuff. Can't do that now, so we're live on Zoom. We'll also be putting a copy up on our YouTube, and as I was just telling David, we're starting a new podcast channel, so the audio will go on there as well. Excuse me. Yeah, so without saying too much, David's been working with Prosperity for a very long time. He's been working within this space now for over 20 years. He's the group sales ambassador. And like I say, pre-COVID, he would sort of travel the world, meet with clients, and talk to people about his experience with property and why it's such a good asset class. So, David, good to have you back. Thanks for being here.
Good morning. Good morning, good afternoon, and whatever to the audience.
Yeah, a bit about yourself and perhaps a little bit of background to Prosperity to people that are tuning in and listening for the first time.
Sure. Okay. Thank you. I've been involved with Prosperity really since its start, which is now over 10 years ago. Although initially it was more in an advisory capacity, and I joined full time about 6 years ago. The business was founded in 2008 and has focused on the investment property sector in the UK over particularly the last 10 years. My background is a bit more general than that. Prior to property, I was in wealth management and financial services, so I've got a pretty good understanding about all the mediums of investment that are out there, although obviously it's a moving feast, and I'm certainly not up to all the changes in legislation worldwide, but nevertheless it gives me a good idea about how to market investment products of all kind and where property sits in the spectrum of investments, such as bonds and equities and what have you. I'm based in the UK. I think it's very important. So literally, I'm speaking to you today from our head office, which is in the centre of Birmingham. And as Callum says, my role really was to travel to the four corners of the earth whenever necessary. But that's been somewhat truncated over the last 6 months by that virus that we've been encountering. But the impact of that has been actually, after a 3-week difficult period, the impact has actually, it's changed the way we do business, but it hasn't changed the amount of business that we do or the energy that's still focused on that property sector.
And if I can just jump in there, I think that's a very good point. That was one of the first things I wanted to ask you is how is business? Because I think that's a good sign of how the property market is doing in general. If you're still selling a lot of units, I know certainly for us, as you say, the first 3 weeks was perhaps quite difficult, but after that, we've been selling a lot more properties and people are wanting to buy, so people are still buying and there is still confidence in the market. Is it the same sort of experience for you guys? Is it more or less, or how's it working out?
Okay, I think whenever you get a major event happen, whether it's a natural disaster or a war or something, that there is we're all apt to panic, particularly as we get older. We all think, oh my God, it's the end is nigh. And I think in those first few weeks, whilst I'm not necessarily the type of person that does panic, I think we all speculated about how's this going to manifest itself in our business. And if somebody had asked me at that point for a snapshot of the next 2 or 3 months, I think my outlook would have been relatively pessimistic. But as Callum says, after that initial 2 or 3 weeks, we found business recovering really, really quickly. And I think we've now got enough of a history in the COVID-19 environment to measure the effect of it in the way we do business. And there are 3 key aspects with a property development company. The thing that really is important for us, of course, is that sales keep happening. And over the last 6 months, after an initial collapse in sales for those first few weeks, we found business trading at about 60% of the previous levels in the first couple of months, and we're now back up at levels that we actually haven't seen since before Brexit. So business for us now is better than it was or has been for 2 years. So whether it would have been even better had we not had COVID, only the clever can comment, but it certainly seems to have had very limited effect over 3 or 4 months. The other things that are important to us, of course, is do we continue to construct? And COVID-19 we anticipated would mean that construction would be stopped. But as it happened, we managed within the regulations that are laid down to carry on building on all our open sites at about 60 or 70% capacity. Again, back then, people were saying, oh, well, you're going to run out of supplies and you won't be able to build. And the irony is that because we carried on building and a number of people carried on supplying, a lot of our competition stopped building. So it meant that supplies actually relaxed and eased, and we were actually able to get stock that we wouldn't otherwise have had or would have expected quite so soon. So a number of our projects are actually ahead of target rather than behind, which is a fascinating scenario that no one predicted 2 or 3 months ago. And then another key aspect is, are people still in the process getting close to completions and exchanges? Are they still exchanging, committing to their purchases, and are they still completing? Completions stopped definitely for a few weeks. The mortgage market in the UK became really difficult.
In March sort of time?
Yeah, where lenders were really saying, we're not going to grant any more advances for the foreseeable future. And that those factors all had an effect on completions, although a number of our investors do complete in cash. So that numbed the pain a little bit in terms of that. But now we found the mortgage market back resolutely, lenders actually offering better terms than they were before. And certainly in the last month, we've had more completions than we've had again for 2 years on projects. So, and a general enthusiasm for completing properties. And then the final adjunct to all of that is, are we still getting tenants in our properties as they get delivered to our investors? And yes, very much so. The properties that we're letting out for the first time at the moment, which are around Birmingham, are very, very much in demand. So that's all as well for the future. And I have to say, going back 4 or 5 months, notwithstanding the fact I'm not negative by disposition, but we didn't expect the position to be positive as it is now. So it's very nice for all of us.
Yeah, no, I think certainly initially, as you say, there was a bit of a panic. I mean, for us as a business, for example, we visit people. We like to go and see people in the Middle East, all around Asia, and when flights stopped, we sort of thought, well, how are we going to do that? How are we going to go and see our clients? How are we going to meet new people? And I'm sure it was probably a similar sort of thing for you. But it's forced us into doing things more efficiently, I suppose, over Zoom and doing it all via video, which might be one of the reasons why we've had more sales, or you see more units going through, because it's easier to do it. But I also think it's probably because the fundamentals of the UK market at the moment are actually very, very strong, aren't they? We've got lots of factors in place that we haven't had in place before, which are making the environment for buying at the moment very, very good.
Yes.
So that was one thing I wanted to ask you, and something we've been getting asked this week. What are there, if you could pick out a couple of things, or what are the things that are sort of underpinning the market at the moment and making it such a good time to buy? In your opinion, what are some of the highlights?
Well, I think we can't, despite the positive outlook I've described, we can't get away from the fact that COVID-19 is having an effect on people's prospects, people's aspirations about the future, the way businesses continue to transact and develop themselves. And so we've got to be mindful of that and look at it. But one of the things as a result of that is, I think there is generally a flight to safety during periods of uncertainty, and we're in a period of uncertainty. And of course, one of the best mediums of investment, I think, is property, particularly residential property. And so by fortune, really, but we're in the right place at the right time as far as that's concerned. Whilst the UK politically and economically always seems to be much maligned worldwide, probably more by our own media than anybody else, but the UK still represents a really nice, secure, fiscally and economically secure place to invest your money. So that again does seem to be a flight to security of investing in the UK, and we've seen a huge uptick in interest from the Far East, obviously Hong Kong, with people thinking, let's try and repatriate some of our assets over here into the safe haven we know. And the UK is a safe haven, I think. So we're getting a lot of that, and that is what we've seen. I think in terms of new inquiries, we're getting a big uptick in international investors, seeing it as a great opportunity. As I said in my introduction, my knowledge of the stock market and the bond market is very good in a general sense, and my perception is that neither of those environments provide as much security as residential property in the UK at the moment. We then also have the merits of sterling, and sterling continues to trade at a low level, albeit the fact it's risen in value in recent weeks, but it still represents good value at the prices it is. And so I think people can transfer assets and transfer funds into sterling and sterling-based assets, and ultimately that will all augment the returns on their capital expended over the medium term. I'm sure that's the case.
Yeah, I think I was reading it's a 5-month high at the moment, sterling. But I mean, as you said earlier, compared to previous levels, pre-referendum levels, it's nowhere near as strong as it was. And I think just to add to those points there, some things I've been reading about and thinking about, and some obvious points as well. The Bank of England agreed to keep rates at 0.1 again recently, which it's great news for getting a first-time mortgage, or if you want to remortgage and sort of pull out equity. So I think that's another thing that's driving the market forward. Stamp duty holiday. That's certainly since that was announced, we've had lots of people that have been sort of in discussions with us and thinking about buying property, having another discussion saying, well, look, if I buy now, it's going to save me £5,000 on the stamp duty, so with the low interest rates, perhaps now is the time to do it. So I think those are a couple of things that have been driving the market as well. And then I read again recently, I think it was in Knight Frank, you probably know a bit more about this than me, David, but it's changes to planning laws in the UK. They're allowing more planning on brownfield sites. Do you know a bit more about that?
Yes, certainly. Just referring back to the previous points as well, I think in this benign inflationary market, which looks to be likely to stay for the medium term, really. Where do you invest to get a good yield and the prospect of capital growth if it isn't property? I think it is the safest environment. Your returns on cash are either nothing or perhaps verging on negative. Equities are volatile and will continue to be volatile for the foreseeable future, in my view. So where can you get a safe haven for your money and generate some income and have the prospect of capital growth? And it is property. In terms of central government worldwide, I think central government is completely aware of the difficulties that the world economy is in. And this isn't like a typical recession. Everyone is encountering recessionary pressures as a result of COVID-19. So governments are having to provide significant stimulus to the markets. And I think the UK particularly has identified that stimulating the UK property market is the way to go. And that's where wealth and income and employment is generated. And so there have been some very, very far-reaching inducements to make the property market recover quickly from the difficulties it had in those early stages, in hugely generous things. And of course, yes, the taxpayer is going to be paying for this probably for 50 years or 70 years, but the immediate impact is to help the market and stimulate the market, and we're seeing that. The stamp duty thing is definitely beneficial, less so, as most of you will appreciate, less so for the investor than for the home buyer. But even so, it's having an effect on the market generally.
Yeah, I think so. And it's all these sort of smaller things combining perhaps to make good conditions for buying. Anyway, David, as usual, we've been chatting away for 20 minutes. We haven't talked about you, about what you do, all the great work you do. So if we can have a chat about prosperity a bit more for people that don't know you, what's your value add? For those listening, just very briefly, prosperity are the guys that allow you to build up a deposit over 24 months. So that's I think if it's a £30,000 deposit, for example, it's £1,250 per month. I think my maths is right there. They'll also offer sort of ways to buy property without a mortgage, where you're putting down sort of 65%, and then they're covering the rest with a builder's loan, and then the tenant pays that off over sort of 4 or 5 years. So they've got a number of unique routes to market, which allow more people to get into the property market, which is one of the reasons we like working with them. I hope I haven't said too much there, David. Can you tell us a little bit more about that? What do you bring to the market for people?
Yeah, I think Prosperity's focus when it started trading over 10 years ago was to provide a solution, an investment property solution, to people who hadn't invested in property before. So it was trying to keep the whole process simple. Back then there was a lot of uncertainty about whether a pension was the right investment, and whether the tax relief was going to continue to drop, and the ability to take tax-free benefits was going to remain. And so we felt that offering the opportunity to invest in property, low-end priced property, with funding almost akin to a building society monthly deposit savings plan or a unit trust savings plan, was the way to get people to make their tentative first steps on the property ladder. And that's how we started to attract people to do that. And that monthly savings plan idea of creating your deposit for a property remains, as far as we're concerned, a unique facility in the marketplace, and is one of the reasons that we've we've attracted a lot of new investors and a lot of loyal investors to our marketplace. The business has obviously expanded, and we've gone up market, and so we have a myriad of different property propositions, from £60,000 apartments to £450,000 apartments, really there to cater for everyone's needs. And I think what we want to do as a company is to work with a series of high-level intermediaries, APW being one of those, where we can work with clients to help them create the security they need for their families and for their pension income, for inheritance, by managing their expectations in terms of creating a portfolio of properties. And that's what it's all about, using people like Callum and Stuart and Peter to go out there, see the clients, talk about property portfolio building, and then for us to come in and see how we can provide the actual physical structures that will enable them to do that. APW are an independent brokerage, so they have access to a number of other businesses, I'm sure, and so they can offer a basket of different properties and property solutions. But we like to try and get as much business from them as we can.
We love working with you, David, because for everyone listening, Prosperity, we have this sort of relationship with them where we can sort of talk to David and Joe, and you guys are very flexible and you work hard to make things work for clients. People that do want to get on the ladder, or people that want to grow that portfolio, you work with them to make it happen. So I think that's very beneficial, and people appreciate that. Just moving on, before we move on, guys, down there's a chat box. If you want to put any questions in there for myself or for David, please fire away. We'll come to that at the end. Looking forward then, David, I know we had St Mary's Square in Chesterfield was launched not Monday this week, the week before. That was 42 units, and I think we've got 2 units left there now, which is amazing. We touched on it before we went live, but what are you bringing to market now? You've got your marquee sites in Birmingham, you've got your ongoing sites in Birmingham. You talked about some smaller sites, some freehold sites. Where are these places, and what are you guys working on at the moment?
We have a number of other projects that we're going to bring to market over the next 3 or 4 months, and we're trying to provide an increasingly diverse offering. We do think that the market will change over the next few years, but one of the things that we're therefore doing is looking at developments a bit like St Mary's, where there maybe 50, 40 units in city centre locations like Chesterfield or Nottingham, where the demand remains very, very strong, but people want something a bit bespoke and a little bit less apartmenty than perhaps some of our projects over the last 5 or 6 years. There seems to be a great appetite for those projects, so we're continuing to bring those to the market, and we've got some exclusives coming up for APW over the next few months, which will help. And the other thing that we're perceiving is a shift in property aspiration. I think the young families still want to buy their first home, but increasingly that's difficult for them still. The access to deposit money continues to be difficult for some people. So we are going into the housing market. We're actually going to start delivering developments of small starter home type projects based around the UK, and actually one of those projects is something that Joe is looking at today down in the southeast area of the UK, which will be very exciting for us, where we can marry up the investor who wants to buy a house, a freehold property as opposed to a leasehold property, and let that out to people who can't otherwise buy their own property, but also to sell properties to first-time investors who are in the more first-time buyers who are in the more fortunate position to be able to accumulate a deposit and buy a property.
Yeah.
So there's a whole new prosperity living concept that we're bringing to the market over the next few months that will attract investors in that way.
Exciting. We look forward to seeing that. I think there is a market for it. We're always getting asked about freehold properties because I think naturally, as Brits, it's something we like is to own a freehold. And another question we always get is, leasehold or freehold, house or flat, what's the best? And it depends what you're looking for, right? I would say houses generally tend to have a slightly lower yield. I would say perhaps the maintenance cost is a little bit higher as well, but then you don't have to pay an ongoing service fee or a ground rent, so there is a trade-off, and it depends what you're looking for. I know a lot of our investors, a lot of our clients are looking at sort of building an income and a pension, so they're more yield focused, but I think certainly, freehold is something everyone appreciates. I think that would, people would appreciate that in the market.
Well, I think leasehold generally is something that is generally misunderstood, and the concept of leasehold and legislation around leasehold has changed markedly over the last few years. The Leasehold Reform Act was brought in by this government just to try and ensure that people aren't disadvantaged by leasehold. And we've done quite a lot of work on that recently. And I know one of the things that I think one of your participants today was interested in was the question of the length of lease on our Birmingham project at JQ Rise. And I think one of the things that people don't appreciate is the distinction between a 110-year lease and a 175-year lease is really quite minor. And we've done quite a lot of work on that in recent weeks to explain that it is possible to extend the term of a long lease, and the cost to extend the term of a long lease individually is really quite minimal. So, for instance, on a £200,000 apartment at JQ Rise, assuming the lease was 110 years, if you wanted to extend that in 2 or 3 years' time by 50 years, it might cost you as much as £3,000. Now, that's something that I think is misunderstood. There's this fear that as the lease becomes shorter, the property becomes less and less attractive, less manageable. There's the fear of being evicted, and actually these things can all be managed so long as you've got a good property broker, property advisor standing by you to explain how to deal with these challenges as they come up. But certainly we're in place to give people advice on that. Specifically on JQ Rise, we are looking to extend the term to 125 years if we possibly can. But if not, then the individual has the right to do it, and they can do it very, very cheaply. And that's borne out by the lending institutions, who all regard anything that with more than 100 years of unexpired lease as virtual freehold. It's not a security risk as far as they're concerned, and they'll lend on exactly the same terms as they would on a freehold.
And is there a tipping point where you would say a value of a property may be negatively affected if a lease goes past that? What would you say to people? I was reading that it was perhaps around 70. If it gets below 70, then you want to certainly consider extending.
And if you like, what we can do is we can circulate to your participants after this some quite interesting data that we've gathered together, just to show the effects of the increase in cost as you get to a shorter and shorter term. So generally, with the tipping point, I think is probably 85 years, and it's at that stage that you think, okay, the time is now to extend by 50 years and pay a price.
Great. Okay, yeah, that would be good if we could send that out after as a follow up. We are, to all the attendees, we are now doing sort of client questions that have been sent in. So please put them in the chat down there. I think it's down there. It could be up there. I'm not sure. Who sets the initial term of a leasehold, David?
Okay. Invariably, what happens is it is the people who own the land in the first place. So very often we will buy a project where we're not the leaseholders. So it's the landowner that's the leaseholder, rather like, you know, in the centre of London, we have some very wealthy people who own the large tranches of land. A lot of these people are royal or wealthy private people, and you can't get them to sell their land because they know they can generate a rent from it. So, for instance, on a project that we have in central Birmingham, we bought that from a brewery that owned the land, and the lease on that at the time, the unexpired lease, because they'd let that property out to another party before us. The unexpired lease at that time was 105 years, so we applied to extend it to 125 years. So it is the land owner that governs the leasehold. But again, referring to that Leaseholder Reform Act, there is compunction of the landowner to allow extendability. So they can't just say, I'm not extending, they have to extend.
Perfect. Okay, thank you. Okay, and just going back to sort of what we were talking about earlier, you mentioned a move into the housing and that sort of thing. A lot of the questions we've been getting have been centered around you know, changing attitudes towards city centre living, you know, with the social distancing and the working from home, and you know, what does working from home mean for the planned development of Birmingham city centre? Are there long-term repercussions on commercial and residential property prices or the rental market? And that's quite a common question, you know, with large-scale layoffs by Rolls-Royce and British Airways. Will there be a long-term impact on the rental market, the economy?
Well, obviously, you're asking a property developer who's bound to have an axe to grind on this, and will try to spin it positively. But I think the best thing is to try and look historically, and certainly as far as we've seen over the last, and it's a short period, of course, to measure, but over the last 3 months, we've not seen a discernible change in the demand for rental property in any of the locations that we're based. Certainly on our Birmingham projects that are completed, there is a waiting list on those properties for people. So I do think at the moment there is the likelihood that there will be a change in the future for commercial property, particularly office and retail. I think you know, our office, for instance, is quite interesting. A ground floor office like ours that can accommodate 30 people. All the businesses that occupy offices like that, I think, are back at work. The problem is where you've got a 25-story building with 300 people on each story, and 300 people trying to get to work on a Friday morning in a lift that can only have a capacity of 8 people at a time. It's very difficult to get them back to work. And so I think office living, office work will change. Do I think that's going to have an impact on, for instance, Birmingham? I think it might. I think we can't avoid the fact that it will. But people are coming to live and work in Birmingham because of the nice environment that Birmingham provides. And I think the likes of KPMG and Ernst & Young and Deutsche Bank and HSBC, who've moved up here recently, realise that their people will probably work from home some of the time and work from the offices some of the time. But we mustn't get away from the fact that people will always need somewhere to live. And that's why I think the residential market is so robust. And a recession, I think, possibly means that more people rent than buy. So again, the investor market, the person who's in the fortunate position of having capital, is probably in a stronger position today than they were 6 months ago in terms of making an investment in a property that will have a number of people with an appetite to occupy it and pay them a rent instead of buy it. And I think that must all go well for the investor market generally.
I think you are right. I was listening to now that we're starting a podcast, I've been listening to lots of podcasts, and I was listening to Knight Frank intelligence reports last week, and they were saying, with regards to changing approaches to the way we live and people wanting to move out to the country and buy a big house, yeah, that's all very well, but realistically, not many people are in a financial position to be able to do that, So, as you say, there will always be a need and demand for housing, and affordable, units, 1 beds, 2 beds, 3 beds in city centres. The demand will always be there, because people, not everyone is in a position to be able to work remotely and live in a big house, or upsize or whatever it may be. So I think fundamentally, I don't see much of a change coming. There will be certain changes, but I think people will still need to live in these places. And the recession, again, Knight Frank, based on Bank of England research, they've revised down their unemployment figures, I think, from 10% down to 7.5. So I think we're not going to have an L-shaped recession or a U-shape. If we are going to have one, we are in two consecutive quarters of negative growth. It's going to be V-shaped, and they are saying that that's the case. We've already hit the bottom and we're coming back up now. So I think it'll be very short term, that recession, but we'll have to see, I guess.
Yeah, sure. I think, again, we've referred to it earlier, but in the event of a sea change in a marketplace caused by whatever, the average person and the media tend to overreact and say it is the death knell for the world as we know it. And there's panic selling and so on. But actually, invariably, it's never as bad as it's described. And, I had quite learned clients and friends of mine who are chartered accountants and lawyers, telling me that their properties were going to collapse in value and they were going to be
50%.
destitute in mid-March. And I was saying, for heaven's sake, get a grip of yourselves. What are you talking about? And they've all forgotten that they said it. I never said that. I've got emails where these, mature people were saying, it's the end. I don't know how I'm going to be able to live in retirement.
And
so I think there's generally that
moment. And there's always a reason, Brexit referendum in 2016, or Trump getting into power, or the general election in the UK just recently. There's always a reason to say, well, actually, no, I'm not going to do this because that's there and it's going to be the end of the world. The end is nigh, all that sort of stuff. But I think with property, if you're buying a property to flip it, then buying just before a referendum or whatever it may be is not a great idea. But if you're buying a property to hold it for 10 or 15 years, then it doesn't matter, because property cycles are 10 years, perhaps a bit longer. So you're always going to see them out, and you're always going to see growth. So if you've got a long-term approach, then I think try not to worry about it so much, because even if we do have a recession, it's not going to last for 10 years or 15 years. Recessions don't. So just something to be mindful of, I suppose, for people. Another question, let's have a look. Updates. Moseley Gardens. Could you tell us a bit about that, please, David?
Yes. Moseley Gardens is one of those sites that I alluded to earlier, where we thought we might stop work there during the pandemic, but we didn't. Work has proceeded after a 3-week hiatus, I guess, but work has proceeded apace since then, and we're actually, I think, on target to complete Moseley Gardens by around May next year. That would be my guess at the moment. So Great. Things are going very well on Moseley Gardens. There are updates on the website if clients have invested there and they want to see them. Certainly, we get every 2 weeks we do a site visit, and our development director produces about 200 photographs for us, and we wouldn't want to send those to everybody because I think some of them are really dull. Yeah, but some of them. So if there are particular clients of yours that have got an issue or a particular desire for anything, then just tell us, Callum, and we'll forward them to them on an individual basis quite happily.
Great, thank you. And just a quick sort of couple of words on the other Birmingham sites, JQ Rise, Smithfield, if we've got anything new to say there.
Okay, on JQ Rise, obviously that was, for those of you that know, that was one BHM. We started remarketing as JQ Rise, I guess 7 or 8 weeks ago now. It's gone remarkably well. We've sold another 50 apartments there, I guess, over that period. It's particularly good news for anyone who invested 18 months or 2 years ago. The project, immediately that we got planning permission there, we gave notice to the company that was occupying the showroom, which is Tesla, to leave the site, and actually they vacated the site about 2 weeks ago, which is great. So we're now in the process of working out how to dismantle the very substantial showroom and facilities there.
Over Christmas. It's a very fancy showroom, actually.
It is, and I'm literally from this meeting now, I'm going down to the site to show somebody around who's interested in buying all the contents of that showroom and a lot of the modular part of it to disassemble and re-erect somewhere else as a showroom for his own business. So that is active, and we would expect to have the site cleared, I think, by the end of October, with a view to starting work before the end of the year. So the project builders that have been appointed for the role are in place, ready to go with 1 month's notice. So it's a big project. It's bigger than it was when we initially launched it, as everyone knows. So it's likely to take 18 months to build, I think.
Great.
But we will be delivering apartments in that project in a phased way rather than all in one go, which is a new development on the way we deliver our projects, born out of the fact that it's such a big one.
Yeah.
Smithfield markets, generally, that's still an ongoing planning process, but we do have some really exciting news there, which I won't steal the thunder of our marketing department, but
Okay,
certainly
good.
have at last got to a stage now where we can submit our planning application. So some big news there, and that will go in within the next couple of months. So we haven't any longer got an obstacle to getting on site as quickly as we can get on site. It's kind of in our hands now. So, but it is clearly, for anyone who bought Smithfield Place or Smithfield Square or Bradford House 2 years ago, the timeline to completion is really going to be 2022, and possibly late 2022, I think, before we start to deliver the first units.
Perfect.
Severn House, we've demolished the building that was on that site. That demolition completed last Friday, and construction will start there within the month. And we anticipate a 12-month build for that. So yeah, lots of positive news out there.
For sure, yeah. And we've got another question come in on Cathedral House for people that are sort of not clients and tuning in for the first time. Cathedral House is a small scale sort of boutique development we did with Prosperity, or help them market in Derby. I think it was 8 units. So it's similar to St Mary's Square, the Chesterfield development, in that it's a smaller scale development. It's town centre. It's appealing to a sort of a boutique niche market of people that are living in those towns and want something that's a bit more unique. It was actually built in the 1700s, I want to say, Cathedral House.
Yep.
So lovely property. Anyway, where are we with that? Could you give us an update?
Yeah. I think there's needs to be an explanation about how we build these projects. The whole concept is around the savings plan element of it. So when we market them with a 24-month delivery time in effect. And one of the reasons we do that is to provide monthly payments that sit quite favourably with people who are perhaps investing for the first time, don't necessarily have any capital to deploy in their investment. But on a project like Cathedral, the reality is that once we start work there, we'll be able to deliver that within about 10 or 11 months. So despite the fact somebody invests today in a project of that type, that doesn't necessarily mean that because we haven't started building it 4 months later, we're running late. Our whole build process is factored into the 2 years for sure, but dependent on the complexity and the size of the site, we might not start work there for 12 or 13 months. So somebody is just securing a right to a unit in that site by paying a modest initial deposit, and that's the way that program works. So Cathedral, as you know, we've got some other sites that are just coming to the end, Halifax, H2, etc., and some of the builder is common to both of those projects, and those people will literally be moved from H2 to Cathedral to start work right away. And I think the likelihood is that Cathedral will probably be delivered ahead of the anticipated completion date, which from memory was something like November 21. So, you know, I would expect it to be completed probably in the summer of next year rather than then. But people will still have the ability to defer their completion to the date that we told them in the first place, if that suits their finances better.
Yeah, and I think that's the idea behind it, isn't it? It's to make the whole concept of buying property more affordable, you know, and to make it more accessible to more people, you know, which ultimately is a good thing if we can help people do that. So, you know, I suppose if people want shorter build times, they can look at things that are halfway through that sort of 20-month plan or 6 months, with 6 months to go, whatever it may be. So as I said earlier, guys, you know, that's one of the benefits of working with Prosperity is they are very flexible and they do their best to sort of help clients out with these sorts of things.
Yeah. Yes, I think that is a key thing. Just quickly, Callum, we've now sold over 4,000 apartments across almost 40 sites. A number of the relationships with clients are, you know, really strong. People have bought multiple units from us, and we have a capacity now to sell from one end of the spectrum a property that's 2 years from completion and £60,000 in value, to a property that is actually build complete, has a tenant in it already, and we can deliver that type of property, which might be 250,000 or 300,000 pounds. So again, it's all about this helping people to start building a property portfolio and sitting down with you on Zoom or in your office. That's ever possible. Yeah, and just talking about what are your aspirations, what do you want to do? Do you have capital, or do you want to commit income rather than capital, or a combination of the two? Do you want income, or is it capital growth that you want, or a combination of the two? And it's building a relationship and a rapport with our investors that we can, you know, develop and farm over the next few years and all benefit from. And I think that's what APW are so good at.
Thank you. And I think that's a very good point, actually, there is to, you know, when you are buying, is to define what your goal or your strategy is going to be. You know, are you, as you say, are you buying for capital appreciation, or are you buying for income? You know, and are you buying for income in 15, 20 years time as a pension, or are you buying because you want income in 5 years time? And once you get to the bottom of what it is you're actually trying to achieve, then you can sort of figure out the best way to do that and what the best properties might be. So I think that is you know, worth reiterating, is defining what you're trying to achieve. Right, we've got another question come in. How can you decrease the legal expenses, especially for a first-time buyer, when purchasing and closing a deal?
Well, negotiate with your lawyer, I guess. I think I'd probably need to know more specifically the basis of that inquiry, but certainly our legal costs that our recommended lawyers tend to apply to purchases are invariably relatively low and comparatively good value as far as I'm concerned. But if that particular question is born out of personal experience and dissatisfaction, then raise those questions specifically and we'll have a look at it. What we try to do is to lead people in the direction of a law firm who can manage the majority of the conveyances on an apartment block, and that should lead to economies of scale. And we negotiate special packaged prices for the conveyance that we believe are very competitive in the marketplace. But if somebody has an experience where they believe they aren't, then I need to know about it.
Yeah, I think the question's around just getting a better deal. If someone's trying to just get a better deal for themselves, I mean, I would say, you don't want to cut corners too much on legal fees. It is important to get people to know what they're doing. But if you're looking at, trying to improve the deal or get a lower price, then now is perhaps a good time to be looking because of the stamp duty. You're going to be paying a bit less. It's always worth asking the developer, or ourselves if there is any wiggle room, I would say. And David would probably say that's something we do quite a lot for clients, is ask if there is any wiggle room, probably get on your nerves a little bit because we do ask quite a lot. And if there's room for it, then there's room for it, for sure. Ultimately, at the end of the day, David and Joe would like to sell these properties they're building, so if they can perhaps do a bit of a deal and get it sold, then everyone's happy. But I hope that answers the question. If it doesn't, then send us an email after and we can do a one-to-one or have further chat.
Yeah, depersonalizing it and not dealing with our aspect about the value of the properties and whether they represent good value. But I think the whole process of conveyance on a property now is so much more complex than it once was. So whilst I'm not the greatest advocate of the legal profession, I generally think they are apt to charge quite well. I do have some sympathy with them for the amount of hours that they have to employ in making sure that a transaction is robust in all different ways, and there's an inevitability that it's all much more expensive than it used to be, fulfilling compliance requirements, money laundering, etc., etc. And it's in the end there is a base cost for doing this work, and it's there's no point them going and getting their law degrees if they're not going to be able to make some money out of it. Yeah,
I agree. Okay, well, we've not got any sort of new unique questions. They're all sort of on the, as I said earlier, more sort of on the economy and the broader COVID situation and your plans, and we've covered those. So I think perhaps just to wrap up, what we'll do is we'll put this video on our YouTube channel and we'll send it out to everyone later today or tomorrow, so you can review it and watch back and whatever it may be. We are super high tech now, everyone. We have made a YouTube channel. We put all of our videos on there. We do a weekly market wrap, which is just a summary of the UK market in about 5 minutes. It's quite useful, quite interesting. And we have just set up a podcast feed, a podcast channel. I'm not sure exactly, but we're turning all of our sort of content into audio as well. So if you want to listen to it on your run, you can, or if you want to watch it, you can, whatever it may be. So please follow us on those things to get updates. Thanks all for listening. David, have you got any sort of closing comments or anything you'd like to just go over?
I think I've probably talked too much as usual anyway. But yeah, we will always go the extra mile to try and help an investor if they're mithered about whether it's the right decision or not. So we're happy to do Zoom calls with anybody, lengthy phone calls. Nothing's too much trouble. So we'll do whatever we can to help you on your investment journey.
Perfect. Thank you very much, David. Appreciate your time. We always seem, everyone else we speak to, it's always half hour, 35 minutes. It always seems to be an hour or more when we have a chat. So I suppose that's a good thing. Yeah, thank you very much. Thanks everyone for listening. And if you've got any questions, anything like that, just get back to us when we send the video out tomorrow.